Robert, Standard Lithium is involved in direct lithium extraction, or DLE, which is different from the hard rock mines we find in Australia or the brines that we find in South America. And I want to start right here with a brief discussion on DLE and the process and how it's different from other mining extraction processes.
You bet. Yeah, it's great to reconnect with you, James. Direct lithium extraction gets a lot of attention in the media from the lithium industry. It is a modern process. So as you highlighted, hard rock mining, I think we all understand how that works. Brine, lithium extraction from brine has been underway for basically 60 years using evaporation ponds. The challenge with evaporation ponds are large environmental footprints, low recoveries, and then the additional challenges that are required for permitting on building these projects, typically in remote regions. Additionally, a lot of lithium resources globally are not in areas where you have the meteorological conditions where you can evaporate the water to concentrate the brine. So the approach the industry is looking at and that we've taken is to use what the industry, as you said, direct lithium extraction, DLE, which is a process where you take brine and remove the lithium from that brine in virtually real time. And then you take the brine that you've released the lithium from, and then depending on the project, you return it to the source aquifer. So it's direct lithium extraction. There's a number of processes that are being trialed and developed in the industry that use adsorbents, ion exchange, solvent extraction. Each project defines which approach you would take when you develop a fully integrated direct lithium extraction process. So it's a process that the industry is evolving into on the brine side. It's not new. There are direct lithium extraction applications globally, several in China. Livent's project in Argentina, which has been operating for decades, uses a hybrid extraction process where they use direct lithium extraction and some conventional evaporation. So it's not new. It is required to unlock the resources that we're developing, and it's also being mandated, if you like, in certain regions where the evaporation pond and the expansions that are being looked at in Chile and other regions will have to investigate whether they can have a DLE process applied to those. So it's an evolution, if you like, in the lithium industry, sustainable, higher recoveries, and a higher purity final product.
Another element that makes Standard Lithium unique is its partnerships with Koch Industries and also Lanxess. And you already touched on Lanxess a little bit, but I want to examine these partnerships and how they benefit Standard Lithium.
Yeah, the application of direct lithium extraction, or DLE, is novel, and the region we're working in with lithium extraction is also it required some hand-holding with investors to demonstrate why it's so attractive from a company perspective. The opportunity to partner with Lanxess off of those existing infrastructures, 3 brine processing plants that produce between 4 and 5 billion gallons of brine annually to the surface, pipeline to facilities, chemistry, and then pipelined and re-injected, allows us to put our primary focus on that direct lithium extraction process, on how to define the most effective and tested process. So when we move from this demonstration scale work we've been doing for 3 years to commercial, we have been able to put the primary attention of capital and technical expertise on that process rather than focusing on the resource development and the infrastructure required for it. So that has been a unique benefit of working with Lanxess with that existing infrastructure. Additionally, first project we're proposing in South Arkansas, which we call 1A, ties into that infrastructure, removing many of the permitting challenges you face on a new project. Private property, so state level only permits. The reservoir management already managed because they've been doing this on these facilities for 60 years. So when we scale up a new process for investors, much of that project killers or project challenges that you face with infrastructure, permitting, social license, operational expertise have been managed. I wouldn't say eliminated, but managed so that we can focus on the core scale up, attention to that core scale up. Koch, they're a global business, star across numbers of different businesses from the energy sector, fertilizer, consumer goods, across numerous industries. They have a venture arm, investment arm that made a $100 million investment into Standard Lithium in 2021. That's not where that relationship ended. It didn't come with strings attached that we had to work with Koch, but they made an obvious candidate for us to investigate where we could benefit from their expertise. Koch Separation Solutions is their water treatment business. Koch Optimized Process Design is their EPC contracting business. Koch Minerals and Trading is a global minerals and trading company. And Koch Technology Solutions is applying processes and direct lithium extraction technologies into this ecosystem. So we've been able to benefit from all of those businesses, and then their attention on the direct lithium extraction aspect. We've been able to integrate process units that they've been developing into our start to finish DLE flow sheet. And as we've been doing that, along with developing our own proprietary processes, we've been able to work with a company that has great expertise, but also when we go to commercial development, by integrating some of these Koch process units, we can get certain performance warranties that you can't get as a startup company, where they can backstop that. Extremely attractive when we're trying something new. We've done the work to find the best process and have entire confidence in it, but where we can manage owners' liabilities and risks with a company of Koch stature and expertise across different processes, it just adds one more box that we paid attention to on how we manage scale up risk and project execution. Two tremendous partners that we're working with there.
Robert, you touched on the Project 1A, and you recently came out with a feasibility study on this project. Well, why don't you take us through the highlights of the economics of that study?
Yeah, the first project that we call 1A leverages that existing ecosystem or that existing infrastructure that I highlighted that Lanxess has at what we call their South plant. So we operate currently for the last, since 2020, a demonstration scale DLE plant to optimize and trial and test and train the operators the most effective DLE process. The scale up that we're looking to do is to take the demonstration plant, which takes a throughput of capacity at that from 50 gallons a minute, to take the full fire hose, if you like, of brine that operates at this facility at 3,000 gallons a minute. Around a 95% direct lithium extraction recovery through to final conversion of lithium carbonate. We're around just over 90 to 93%, gets us with the lithium grade in this resource to a project of operating 5,700 tons per annum of lithium carbonate initially, over a 25-year mine life, 5,400 tons. Not a world beater project, but it's a modest scale up where we manage that risk. The capital requirements for this are not massive like you'd find on many new projects where we're looking at multi-billion-dollar capex, $365 million. It is a modest project, so the capital intensity per ton is slightly higher, because when you're building something new and you don't benefit from those economies of scale, you have a slightly higher capital intensity, but the project economics are strong. Again, the region we're working with and that infrastructure is the reason we're doing this in a staged approach. The project economics are an NPV after tax of $550 million with an IRR of 24%. The operating costs are $6,800 over the life of the project, and that is really driven by the grade. What we're working on with this project is it's an existing plant. The lithium grades are high for North American standards, over the life of the project, the concentration is around 217, just under 220 milligrams per liter of parts per million. But it's an existing brine flow. Permits are straightforward. The path to go from where we are today, we're putting in place the project finance teams. We've got commercial arrangements that we need to work through with Lanxess on the operational aspect, brine supply and brine disposal agreements. But at the project level, we've defined and we've alerted the market to this. Lanxess has an opportunity to be a project partner at the equity side in the project company, and then also on the offtake side. So we're working through the steps of the commercial arrangements we currently have with Lanxess today. The intention on this project is to move through these steps, get to a final investment decision in 2024, followed by construction, and then commencement of production in 2026.
That's a good overview. Let's spend a little more time on the CapEx. You said it was 365 million, and I just want to spend some more time on how you would fund that.
Yeah, again, it is a modest project. Again, it's not an insignificant amount, but the majority of the project we're targeting through a debt facility. We've been working with BNP Paribas, who's one of the world's leading, if not top of the pile, in mining project debt finance. So we're working with them to put the pieces of the puzzle together. The completion of the definitive feasibility study has now allowed us into that next step. And we've identified a significant amount of interest in the project. And we'll be working with the lenders and their engineering teams to ensure that we have what will be required to be an attractive project for them. We're also actively working with our advisors on how we may benefit from policies coming out of Washington, specifically on this project in the Inflation Reduction Act, between 48C, which is an opportunity for a project credit or tax credit on the capital side, and then also on 45X, which is a manufacturing credit. So the completion of the definitive feasibility study is allowing us now, from the work that we've been doing in the background, to really accelerate so that we can look at non-dilutive opportunities through tax policies and put the best debt facility together, and then working through the commercial arrangements with Lanxess so we can define ownership of the project and offtake. And we've been extremely careful on ensuring that we've been putting the teams together and having the data so that we can move quickly, because within the definitive feasibility study that we completed and have announced, we also have a conversion mechanism within that to make that an LSTK, or a lump sum turnkey EPC contract. So again, where we work to manage and where we can provide more certainty on the project's capital requirements, on scheduling and certain price and engineering on the engineering side protections for our shareholders.
And OEMs have been very active in partnering with lithium producers and developers. Is this an option open to Standard Lithium? I know you made mention of the fact that you do have obligations with Lanxess, but is this still a possibility?
Yeah, the environment for offtake across OEMs, battery companies, and then additionally strategic interest at the project level is extremely high. I wouldn't call it a waiting list per se for the Lanxess project, but there's been a significant amount of interest expressed in all production. So with the Lanxess project, we have the commercial arrangements we're working through. On the larger Southwest Arkansas project, we completed a preliminary feasibility study in August of 2023. Much larger project targeting 30,000 tons at a base case of lithium hydroxide, 35,000 on an uppercase. That project is extremely attractive because it's domestic source of lithium hydroxide. I spend most of my time when I'm in Arkansas touring and hosting site visits from offtake parties interested in domestic supply. The attractiveness of having a domestic source of lithium hydroxide to qualify for the Inflation Reduction Act on EV tax credits is one important aspect, but the project's appeal also comes from working in a region where, as I mentioned earlier, that stakeholder support is unique. We don't face some of the challenges that some of our peers are having to navigate on permitting and other stakeholder engagements. And our environmental footprint by using a direct lithium extraction process is also much smaller. So you can demonstrate that you're not just securing supply, but you're securing it domestically on projects in a region where you have those benefits from sustainability, stakeholder support, and the project has a very clear path to move forward without some of the, there's always going to be challenges, but some of the uncertainty has been addressed. So that interest on both projects is extremely high. We're being thoughtful to our shareholders and then also to our project execution strategy so that we bring in partners that are complementary to both the ones we currently have and then also to our larger business development as we expand the projects and as we extend into Texas as well.
You just touched on your second project, which is called Southwest Arkansas. You recently came out with a pre-feasibility study on that project. Why don't you just take us through the highlights behind that study?
Again, so one of the unique aspects of how we're building these projects is the Southwest Arkansas brine grade is significantly higher than what we're starting with on the 1A project, double. We completed the pre-feasibility study, primarily moving the project forward, adding data points on the resource, because the extraction process that we're developing is applicable across the Smackover Formation. The chemistry is largely homogeneous. We don't have to reinvent the wheel at each project. We went into this pre-feasibility study with extremely high confidence and data points that we'd collected over the last 5 years, but we were really surprised with the drilling work where in areas we were expecting to confirm grades of 200 plus parts per million, we were seeing grades 400 and 500 plus. So the resource and our understanding of it was improved with that data, but it also showed a much more robust project than even our highest expectations were. The after-tax NPV, where we use our base case 30,000 ton per annum lithium hydroxide, is a $3.1 billion NPV project with a 32.8% IRR. Extremely attractive. The average lithium concentration on this project is 437 milligrams per liter or parts per million. That's what you see on projects in Argentina. Producing lithium hydroxide, the grade on any project is king. On direct lithium extraction, extremely important. If you can pump a unit of lithium, a unit of brine to the surface with 1 unit of lithium in it, and your cost is $1. If you can pump the same unit with double the amount of lithium in it, you almost have a linear cost savings. So grade is extremely important on DLE. On this project, our operating costs are just over $4,000 a ton for lithium hydroxide, just under $4,100 to be more, to round correctly on that. So extremely attractive. The upside case on this is a 35,000 ton per annum project. We'll be moving to selection of an engineering firm to begin FEED studies and definitive feasibility studies this year, 2023, and then moving into what we're hoping to be completion of those studies in the summer to Q3, Q4 of 2024. Extremely attractive economics on that project. And then recently, we also completed the acquisition of 118 acres of private property, which allows us optionality on locations for the conversion facility. Close to infrastructure, close to highway systems in areas, which is really important to highlight across the Smackover Formation, is we're in areas which are not under the same water stress that you find on a lot of the other lithium projects under development.
Robert, as we wrap up, you provided a lot of detail on your two projects, the Lanxess and the Southwest Arkansas project. But maybe you can just summarize for investors what they can expect in terms of news flow in the coming months.
Yeah, well, since we last spoke, it's also important to highlight, James, the project that we've been building and the attention that we put into the Arkansas Smackover Formation and the work we're doing in Texas is now starting to be validated by the entry of some of the world's biggest energy companies securing land positions. Media reports that they're in Arkansas as well. They could have chosen anywhere on the planet. Additionally, our neighbor is between the Southwest Arkansas project and the Lanxess project is Albemarle, world's largest lithium producer, who operate bromine assets in South Arkansas. And now they've also begun paying attention in recent announcements that they're focusing on DLE, piloting work, Arkansas as an opportunity. So the region investors are going to get a lot more media attention on it. I've been banging the drum for 6 years, but these recent new entrants have amplified why we believe the region is so important. So with our projects, we put together a well thought out process. We're working as quickly on these projects as we can. We'd love to be able to work quicker, but the technical work needs to be done. Completion of the definitive feasibility study now puts us on the path towards moving towards the completion of the agreements with Lanxess so that we can get to construction targeting next year on that first project. Extremely exciting. I've been told by my team that expect the busiest 6 months of our career at Standard Lithium to date. So I prepped the family on that. On the larger Southwest Arkansas project, we'll be moving towards FEED and definitive feasibility study work, which will be mostly filling in more technical, geological, and hydraulic data. Additionally, the expansion work that we're doing in Texas. Spent a lot of time in Texas now, and we've got a very large team of landsmen and also on the technical, geological side, where we're looking to secure large lease packages where we've identified the most optimal brine conditions. So we'll be able to, once we've secured those leases, inform the market on the scale that we believe this region has to be the most important lithium producing region in North America.
Well, Robert, it sounds like you and your team have a very busy few months coming up, and I want to thank you for spending time with us today and providing an update on what's happening at Standard Lithium.
Thanks, James, and I look forward to keeping you informed over the next coming months as well.